How's it going today, guys? Welcome back to the channel. Hope you're having a great day so far. So in this video today, we're going to be talking about GE, General Electric stock. As a lot of you guys know, that is my largest individual stock position, and we've seen a lot of excitement and movement with this stock so far in 2019. And as I'm sure you guys know, 2017 and 2018 were absolutely terrible years for this battered and beaten up stock here. So just to go over with you guys here a brief history of what we've seen happen with General Electric stock. In 2017, this was a $32 stock at the beginning of the year, and it fell down to $17.50 per share, being a drop of 45% in 2017. Then in 2018, it was even worse. The stock went from $17.50 a share down to $7.50 a share, which is a drop of 57%. And now, so far in 2019, from the beginning to where we are now, the stock has gone from $7.50 a share up to $10.50 a share, a rally of just 40% in the last 6 weeks. So a lot of people are scratching their heads wondering what happened here to cause this bull market here with GE stock. Why is the stock all of a sudden experiencing this rally? And for those of you who did decide to scoop it at the $6 to $7 range, you have a really nice return here in a very short period of time. So GE officially bottomed out at $6.66 per share, and that was in December of 2018. And then at that point, it started to go into an uptrend. And the main reason for that is the fact that even though there was so much going on within this company, so much bad press and bad news, at a certain point, a stock truly does become undervalued, and the mainstream investors began to realize that, and a lot of people began scooping up shares because even though this stock was there was so much bad news about it, you could not ignore the fact that that was a very low price, especially when you looked at the market capitalization of what the market was valuing this company at compared to their revenue, for example. It was unbelievable how cheap this stock really got, but it was because there was so much bad press and bad news within this company. And so from the bottom of $6.66 a share to where it is today, that is a rally of 58%. So if anybody did end up buying GE at the $6 to $7 range, I'd love to hear your comments down below. Are you going to be holding on to it for the long term? Are you just going to take your money and run? Let me know what you guys are planning on doing with General Electric stock. But as far as my position goes with this company, I have 1,045 shares of GE stock at a cost basis of $14.20 per share. So I'm still down quite a bit with General Electric, down 25%. Or $3,700 depending on how you look at that. But as I'm sure you guys can imagine, back when that stock was like $6 or $7 a share, I was down massively on this position. And so I have no doubts about this company in the long term. I'm sure that I will have the opportunity to sell at a break even or at a profit if I wanted to in the near term. But I do consider this to be a long-term investment. I'm going to be holding on to GE for, I would say, about 5 years just to see how this pans out. But I definitely learned a lot of lessons from this investment here in General Electric that I want to share with you guys. So lesson number one that I learned, and that a lot of people learned with General Electric, is that dividends are never guaranteed. So as much as we'd like to think that companies are going to continue to pay dividends just because they have previously, we have to remember that dividends at the end of the day are not guaranteed. And a lot of people solely invested in General Electric because for a while it was showing a very high dividend yield of, I believe, 7 or 8%. So people saw that and they said, oh, I can get an 8% return here by investing in GE stock and collecting my dividend. And then Larry Culp came on the scene and absolutely slaughtered that dividend down to 1 penny per share. But a lot of people specifically bought General Electric because of that dividend. And then when that dividend was slashed to 1 penny per share, they're like, why the hell do I own this stock at the end of the day? So never invest in a company solely because of that dividend yield. I've said this time and time again. Dividends are never guaranteed. They can be restructured, cut, or canceled at any time, as we saw here with General Electric, where they are virtually barely a dividend payer at this point, just because financially it does not make sense for them to continue paying that dividend with the cash management problems that they are having. The second key lesson I learned from investing in GE stock is this lesson of patience. You should be very patient when you begin entering any kind of position. And these days as well, I mean, I can understand when we were paying commission to be trading stocks that, you wouldn't want to follow a strategy of averaging down or easing into a position. But these days, there's really absolutely no excuse why you would dump all of your money into a stock at one particular time. The strategy I follow now is to take a small initial position in a stock, maybe 20 to 30% of how much I truly want to own of that stock. And then I pretty much use that as a way to tell what is the price doing. If it continues to fall, I will begin to accumulate more and more shares. Very similar to what I did with JD. I started buying JD, I believe, at 32 a share, and then I accumulated more shares at $20 or so, $20 to $21. And so even then, $32 was, it was obviously had a lot more to fall, falling all the way to 20. So patience at the end of the day is the most important skill you can master as a long-term stock market investor. So if, for example, you wanted to have a $5,000 position in a company like General Electric or any company out there, I would start off personally with, maybe $1,000 to $2,000 invested, and then take a couple more bites out of that stock as you can see what that price is doing. If you just dump all of that $5,000 into that stock at one point in time, and then the price falls drastically, like it has for me with General Electric and JD.com, you've at that point removed the opportunity to average down and lower your cost basis unless you want to acquire more shares. But at that point, that stock is going to carry more weight in your portfolio than you had originally planned for. So that is my recommendation, is to average down and take a small initial position. But whatever strategy works for you guys at the end of the day is what you're going to follow. And then the third and final thing that I learned here, and that a lot of people have learned with GE, is that market sentiment or the overall feeling of investors can literally change overnight. I mean, we saw this going from being one of the most hated stocks on Wall Street, next to maybe like Snapchat, for example, to all of a sudden experiencing a 50+% rally in 6 weeks. And so timing the market and getting in at the exact perfect time, it's going to be an impossible task. You might get lucky once in a while and buy close or near the bottom, but trying to buy stocks at the bottom is definitely not a strategy that I personally follow. So it may be something you try to do, and maybe using something like technical analysis, you're able to get a better idea. But personally, I like to know that I own shares at that price, and once it's below a certain price range that I'm comfortable with, I have no problem accumulating shares at that price because I believe that company will be, worth more in the future. All right, so now we're going to get into a couple of reasons why we've seen this bull market taking place here with General Electric stock. But before we get into that, I just wanted to mention that if you guys are interested in picking up a completely free stock, Webull is offering a promotion where if you open up an account with them, you don't even have to fund the account. They are going to be giving you a completely free stock just for opening that account. And they actually sponsored a giveaway here for my channel. What they're going to be doing is anybody in the month of February who opens an account with them and then funds it with at least $100, they're going to be in the running to win a $500 Amazon gift card that they're going to be giving away at the end of February. Now, this is a giveaway that they have sponsored. This is not a giveaway that I am doing, but if you guys are interested in checking out this trading platform, it's kind of a more sophisticated platform than Robinhood with a lot of technical indicators, and it's more geared towards the active trader. So if that interests you, you can grab a completely free stock down below, and if you deposit $100 or more in the month of February, you will be in the running for that Amazon gift card, and that is only people who are subscribed to my channel, so there's really not going to be that many people entering that giveaway. I'm affiliated with Webull, guys. You don't have to take me up on this offer if you don't want to, but that option is available to you if you're looking to get a free stock and potentially win that $500 Amazon gift card. But anyways, let's go ahead and get into it now and talk about why we are seeing General Electric in this bull market. First of all, one of the main reasons that was an early catalyst for this rally in about December is the fact that we got wind that the GE healthcare spinoff is still on track for the middle of 2019. Basically, when Larry Culp became CEO, there was questions of whether or not they were still going to be spinning off the healthcare business. And that was something that I think most investors were supportive of, is separating that business off and actually having it be its own publicly traded company. But then people were wondering, is that still going to happen under the new CEO? And we know that they have officially filed for that IPO and that spinoff of the healthcare company. And so that is expected to take place in the middle of 2019. And so this is going to be interesting for GE shareholders because at a certain point, I believe they will set a record date. And if you are on the books as a shareholder on or past that date, you're going to get shares of this new GE healthcare company once they have their IPO. So basically, they are taking the GE healthcare business and spinning it off into its own company and issuing shares to GE investors, people who already own General Electric stock. So you are now going to have, two different General Electric stocks after that spinoff takes place. And the reason why they said they're doing this is going to allow General Electric to focus on their core industrial and energy business, which makes sense. And it also is going to be allowing GE Healthcare to be more flexible and innovative because they're not being bogged down by these other businesses that GE is involved with that are not necessarily doing too well. GE Healthcare is arguably their best run business, and so it makes sense for that to be a standalone business. So personally, as a shareholder, I think that's kind of exciting news here that we're going to be getting, stock of GE Healthcare, and that company is going to be a standalone company, and so we should be expecting to see that taking place sometime in the middle of 2019. So the confirmation that is still underway and still in the works was definitely a bullish catalyst for this stock. Number two, the second big piece of news here is there was some restructuring of this merger with Wabtec Corporation, and that is the Westinghouse Air Brake Technology Corporation. It is a passenger rail transportation company, and this is one of the businesses that General Electric is selling off to generate cash. They are selling off their GE transportation business. And so they are going to be merging the transportation business with Wabtec Corporation on February 25th. And General Electric shareholders are actually going to be getting issued shares of Wabtec stock. On February 14th is the official date. So on Valentine's Day, you'll log into your brokerage account and you'll have a little Valentine's Day gift there from General Electric. I believe from what I read, you should expect at the current market value of Wabtec to get about 40 cents per share of GE that you own in Wabtec stock. So me personally, that'll be about $400 worth of Wabtec stock based on what they are doing there. So General Electric is basically selling their transportation business to Wabtec Corporation in exchange for shares of Wabtec. And then immediately after that, they're going to sell that off to generate cash. And this is going to allow them to generate about $3.4 billion in cash. And so earlier on, this plan was for them to generate, I believe, about $2.9 billion of cash, and it would have given current GE shareholders a larger stake in Wabtec. But they actually restructured that deal. Larry Culp restructured that deal so that now General Electric shareholders are going to get slightly less Wabtec stock, but their GE themselves is going to be able to generate more cash from the deal. And overall, I think investors understand that's the best possible option here because General Electric needs the cash at this point in time. And as much as we want that little incentive there with a couple shares of Wabtec, we would rather care about the health of the core investment here, which is General Electric. And then the third reason why General Electric stock is in an uptrend here is because we had the Q4 earnings report come out and there was no more bad news within that earnings report. Pretty much every report we've seen over the last year or two, every single earnings report, there was more and more bad news being stacked up. And this is the first report where pretty much it was exactly what was expected here. We saw cash flow is sufficient with them, so there is no credit concerns. They are selling off, as we said, transportation as well as Baker Hughes, and they're doing the healthcare spinoff, which is going to allow them to generate, a large amount of cash. We heard some positive commentary from analysts, and a lot of people are very trusting and supportive of Larry Culp as the new CEO of this company. And so basically, because there was no more bad news in that Q4 earnings report, we saw a massive jump in that stock. I believe it was up about 12 to 15% on the day of that earnings report, simply because there was no more bad news that came out about General Electric. So we are hoping that the worst is behind us. There's some interesting, drastic moves taking place here with these spin-offs and the selling off of these businesses. And we certainly hope this is going to be enough to help GE in the long run and return to a well-run business that's generating, healthy amounts of cash flow, and then eventually being able to pay a dividend that's in line with other industrial companies out there. So just how much cash was General Electric able to free up? Well, between the transportation merger with Wabtec, the Baker Hughes sell-off that they have planned, and that I believe is going to be for July of 2019 is when that's going to go through, and the healthcare spin-off in mid-2019, that's going to allow them to generate about $30 billion in cash. And also by reducing that dividend to 1 penny per share, that is saving them about $4 billion per year. So any concerns about, cash or this company possibly going under or going bankrupt, those concerns are pretty much all subdued at this point because of the amount of cash that they're going to be generating. And the other big piece of news that came out in this quarter is that they finally settled the investigation into their subprime mortgage business, which was the Weyerhaeuser Mortgage Company, WMC, which was owned by General Electric. This was the 5th largest subprime mortgage lender in 2006. If you guys are not familiar with that, check out the movie The Big Short on Netflix. It talks a lot about the subprime mortgages, which was a major catalyst for the 2008 stock market crash and the housing market crash. And so once the subprime market collapsed, WMC closed their doors in 2007, and obviously there was a lot of shady stuff going on behind the scenes, so General Electric finally agreed to pay a one-time settlement of $1.5 billion. Obviously a massive sum of money, but that's going to allow them to put that to rest and not have to worry about that hanging over their heads anymore. So having certainty on that issue was also a positive for this quarter. But anyways, guys, that's going to wrap up this video. That is an update here on General Electric stock, what's been going on with this company, and why we have seen this insane rally taking place here in the last couple of weeks. So let me know in the comment section what you guys think about GE. Have you bought shares of this company? Are you still saying, you wouldn't touch it with a 10-foot pole? I would love to hear what you guys think. But thank you guys so much for watching this video. I hope you enjoyed it, and I will see you in the next one.